watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Hello, everybody. It's Wednesday. Dan and I are here. We're going to do it a little different this time. I decided rather than our usual, mostly slides and some presentation, we do a few slides and a lot of live charts and going over the markets and sectors, some market internals, all good stuff. We cover some of this pre-market and of course in the green room. But based on where the markets are at now, everybody's always interested. Where's the markets at, where they're going, and so on. Thought it was a good time to review that. So we will. See the slides Dan has. We'll see if we go through them all. But, we'll go through the markets. We'll go through sectors, as I said, stocks that you might be interested in, and we'll show you how we do it, what we call more of a top-down approach of markets, sectors, stocks, some intermarket analysis, and so on. So, of course, you'll always learn a lot at MT Live. So let's get going, Dan.
All right. Good afternoon. Sounds great.
Okay.
All right. So yeah, we're gonna show you what we do in real time to analyze the market, whether you wake up every morning or you've taken a few-week vacation, and we're going to show you, as Greg said, the top-down approach to that's what we do for a living. All we're doing is trading compelling patterns, stocks, bonds, commodities, currencies. We have the same approach, which is it's technically based, and as the first bullet shows you here, we're looking for high probability setups on multiple time frames. We'll go through the other concepts that are important to us, and then whatever time frame we're trading, that's the instruments that we're trading. And that's all we're doing. That's our business, to accumulate and then liquidate those positions to make a profit. So our first step is going to be analyzing the broader markets once we look at Greg's live slides, and we'll show market internals, etc. But Greg came up with this great little analogy here, the three-legged stool. So yes, we're looking at compelling patterns on multiple time frames. But the other components that we're looking at, in addition to the technical analysis, are market internals and intermarket analysis.
Wasn't
Greg,
always that way, Dan.
Yeah, tell them why. Tell them how you came up with that.
Well, I think, all of us, we come to the markets and, maybe some people start with the fundamental approach. When I tried to learn it, it was brain damage for me. Not much into the academics, but anyway, it was too subjective and too much to follow. Anyway, so I got to the charts and learned about price patterns. And so the next step in becoming successful at doing this is to go back and look at, let's call them mistakes. Sometimes they're mistakes, sometimes just bad market. Anyway, going through hundreds of trades, what is the common denominator between the winners and the losers? Well, one of the big influences, which was a light bulb moment for me, kind of you think common sense now, the market. The market pushes things around. So even a good looking pattern could fall apart in the moment because of the market environment. And a lot of times what happens is you have an individual stock which look great. The market goes through a corrective period, and that stock is damaged in the short term, and it comes roaring back when the market is ready. So the broader markets and the intermarket analysis part, you're going to trade semiconductors. You look at a semiconductor index. How is it acting relative to the index, relative strength, relative weakness? And then market internals. So we don't look at indicators. We don't subscribe to the idea of overbought and oversold, because what's going up can keep going up, and down keep going down. However, when you take a very broad measure of the broader markets through what's called breadth, and then sentiment, how are traders feeling about the market? How enthusiastic are they? How enthusiastic are they with their money? Which is really tells us. So that three-legged stool puts the odds very much in our favor for swing trading and investing, and it can for intraday trading as well. But intraday trading is a little bit different, but we'll look at intraday charts. Let's not spend too much time on the slide so we can get to stuff.
Exactly. And so our approach applies to any time frame you're trading. Swing trading, we're looking at that. We want the compelling pattern to be on the daily. Position trading, the compelling pattern on the weekly. If you're day trading, it could be 5:15, but our approach is going to be the same methodical, systematic process to anything you're trading and on any time frame. So as we go through charts here, and this is what Greg covers in his awesome MTS course, the swing trading course, is all of these concepts make up our approach to make a decision of whether something's a high probability setup to trade. Everything starts with the price pattern, but where is that price pattern in connection with the overall trend, support and resistance? Is it showing relative strength or weakness? What are the different time frames? Are they in alignment, as we say? Retracement analysis. We're going to be looking at the individual bars, and then market internals, as Greg was just describing.
Dan, one sec on that. We don't have to go back to it, but a main part of this particular slide says master trader concepts that form a strategy. And, Dan and I have taught many, many individuals, I guess thousands and thousands. So we get to hear what the majority of people think as they learn and common questions. So one of the things that we always see is that a student will not always, but often will refer to a particular concept and then at the time be willing to press the button on a trade. And we'll always say, well, you missed the fact that there's resistance to the left, or you missed the fact that it's a deep retracement, or that the angle of retracement was severe. So there's many things. And so as you learn all of this, part of the learning process is to remember individual concepts. Now, it makes me think, Dan, why are people attracted to indicators?
I was waiting for you to finish.
Right.
Because I was thinking, all right, Greg, I don't want to think about all these concepts. I want a red light, green light to tell me what to do and they say I can make, a gazillion percent trading 20 minutes a day. Why? So I'm going that route.
Right. So they would take all of those concepts, maybe not these concepts, but the idea of the ultimate indicator based on whoever wants to put together their own concepts, whatever that might be, would say, hey, let me take all these individual pieces and put them together in that red light, green light thing, or some kind of a flashy signal that says, now this is it. So that, you don't have to think. Whereas our approach is, let's teach you in detail all of these different concepts and then help you to remember them through coaching and these MT lives. And so after a while, you start to think that way and it becomes second nature. It takes a little while.
Yeah, but after your course, you always hear me talking about the 4 levels of competence of learning. So after your course, I say that people have conscious competence. And from that point forward, it's just like any profession, playing basketball, doctor, you pick it. It's then the seasoning process. Right. And then the goal is to get to the unconscious competence. I mean, you and I can look at a chart in 1/8 of a second. Our brain says that's a no-brainer setup. It would push the button. Whereas somebody coming right out of your course, okay, I got this concept. They can come to the same conclusion. It just takes a little longer.
Why in this business do so many, not that I got around it myself, but we come to this business thinking that we take a course and right away we're going to be successful. And you wouldn't think that in any other business. So you think about the guy who's, the NBA star, whoever it is today. I don't follow that much, but the guy who can throw that foul shot thing,
Right.
85% of the time and put it in the net.
Right.
How many tens of thousands of times did he throw that ball
Without a
before he
doubt.
got to that rate?
Without a doubt.
This is the same thing.
Right.
So money management is so important. It's so important to your success because look, if you throw the ball and it bounces off of the hoop, big deal, you go pick it up. Well, you keep throwing the trade, without money management, loss, you're not going to make it. So trading small at the beginning is so key to success.
Yeah. Let me just focus on this third point of why we believe in technical analysis. It works because there's so many different types of market participants, both in terms of reasons they're entering, time frames that they're trading, fundamental analysis, whatever, looking at the moon. But technical analysis, it's the sum total, because it's collecting all those buy and sells from all market participants all over the world. And so we say it's the true collective beliefs, and that's what we are trading. And that's why we say charts don't lie. Our approach, you're going to see on our charts, we use very simple color-coded candlesticks, couple moving averages, and volume. That is it. You can try to be impressed with people throwing around words, but just look at the heading up here. Terms and interpretations are meaningless without understanding what's going on in the price pattern. So we don't care about names. We care about understanding what is going on in the picture. Very simply, so this is what a candlestick is for beginners. On any time frame, it's measuring the open, the close, the high, and the low. So the bulls win on this one because it opened up here and demand overwhelms supply, which is what caused it to trade at higher prices. And then the opposite, the bears win. It opened up here and they kept selling. So the demand couldn't keep up with the selling and people had to accept lower prices. So now we're going to combine the pictures of these candlesticks and come up with tradable patterns. These are all giving us the same meaning of momentum is slowing. So as Greg said before, does that mean, does this mean I should sell my long if I'm in it? Does it mean I should short it? No, we're just showing you how to interpret objectively what is going on. And we're going to show you that when we look at real charts here momentarily. Same here. I mean, the market's been on an absolute tear since the March low. And Greg, this chart right here reminds me of something we looked at this morning, or two of them actually, TTD and Piton, and also JKS, the solar stock. They've been on a tear like this, and they aren't ready to short because there's no, the momentum might be slowing, but there's, as we use this term here, there's no potent reversal yet.
Right.
Yeah, crazy.
It's, I don't know, with the solar thing, obviously something's going on there, with movement away from other types of energy. Piton, I have one of their bikes. It's a fabulous product, long before they went public, but I think they moved their model to some kind of a subscription base where you get the bike for a certain amount a month. I don't know how they collect. They come take the bike away if you don't pay, I guess. I don't know. But, what they did based on the shutdown, I don't know if they didn't know the shutdown was coming. I knew they were going that way. It was brilliant. I mean, here they are with people where their incomes are getting cut. Now, whatever they, their backup funds, if they have, they can get this fabulous product for a low subscription rate versus, I had to pay the whole thing up front. And so it soared.
This is totally off subject, but I invest in all kinds of things. I have an investment like that because the solar credits were backed and guaranteed and so forth. And so I have a little investment where I am backing those loans for those companies. All right, let's continue. These are all pictures of beautiful little color coded candlesticks. Again, I'm not showing you time frame. I'm not showing you what this is. But as we said with the other concepts, we want to see what these look like with those other concepts. But every single one of these pictures is telling us it's bullish. Greg, why don't you tell them what an uptrend is and what these pivots are and why they're important? What information do they tell us?
Because everything that we look at on a chart is going to create our bias as to, is it going up, down, or sideways, which should be relatively simple. But when you start getting into, the type of analysis that is pounded at you that you needed to do, drawing trend lines and fib lines and all the other stuff, you have to base your decisions and your interpretation on what's real. And that's price, not by you connecting dots. So, different points and wondering, are you doing the right thing? So it starts with just the simple definition of an uptrend, which we all know, higher highs and higher lows. So what makes it so hard to determine if it's going up, down, or sideways? As I said, the indicator-based methodology is the big part. Now, when we boil it down to and say, well, what is a turning point? Well, a turning point is just simply a bar that has higher low bars to the left and the right. Well, how many? We have to make a choice. So 1 or 2 tends to be too little, and 4, 5, 6 and more tends to be a little bit too much. 3 works. Again, it's a choice. So it's not a matter of fact of you have to use 3. It's just that that's what I've used for many, many years, and looking at other variations, this works and it's simple. So a high pivot or swing has 3 lower highs to the left and right, and a low pivot has 3 higher lows to the left and right. And when you get a series of pivots making higher highs and higher lows, it's an uptrend. Simple.
And no emotion.
It's 0.
It is what it is. This is what we say.
It's taking you out of the decision-making process, unless you want to deviate it from it, and then you're not following a disciplined approach. Yep. So by making these rules, which, where you have this clarity, well, the market's not open to say, yes, I believe that this base of rules and methods work over a long period of time, and there's nothing perfect. So when does it no longer meet the definition of an uptrend? When it breaks the prior low. Simple. What do you do then? Well, maybe I'll short. Other concepts have to come into play for us to take a look at that. But as you can see on the chart, on this particular example, when it violated the prior low, which is almost at the top there, I'm eyeballing it, yeah, right there. It then made a lower high, which at that point in time, I could make the decision to sell short because it's violated the trend and it's making a lower high. Now, I can sell it short before it actually becomes a pivot, because that's going to take 3 more bars. In this particular example, that didn't happen. It actually created a pivot. So it's a little bit better of a setup versus just shorting under the topping tail bar, because it went 3 bars, which made that a stronger reference point of resistance. And it was then become an upside shakeout, as we call it. So that was a very nice shorting setup. Now, you can see it went right back up afterwards. It came down. If you point, well, I can point to it, the other one. So we look to the left, as we say, So as this starts to break, as it did here, the assumption is, well, it's going to at least go here because that's a pivot. Now, what does it do when it gets there? I wouldn't have expected it to do this, to come all the way back up. But that's why we look at retracements. We look at, red bars ignored, breakdown failures. We have other concepts to guide us to make sure that we don't get stuck in this thought when now this thought is saying something has changed here and you have to respect it. So it's a continuous process of doing the analysis. So this easily could have, gone down, but it didn't. But we don't show you things for say that, look, this is how things work and it's going to work all the time and lead you to thinking that it's an absolute, because there are no absolute 100% setups in the market.
So, and Greg will show us this live. This obviously is back here last year in December when we had a sell-off prior to the March low. But these are the internals that we look at to help us determine if the market is getting, too fearful or too bullish. This is when it got too fearful. Breadth is the McClellan oscillator. Greg created these bands that fluctuate in bullish or bearish times. And anything under this 200 McClellan, the breadth is getting oversold. Trader sentiment is a 5-day moving average of the put call ratio. So when the option traders, in this case, are rushing to the option markets to buy puts for protection out of fear or speculation, then they're too fearful. So when these two are in alignment, they're telling us danger, danger, that this is ready for a bullish turn. And I think it turned actually the very next day. We can show you what they looked like at the March low, the coronavirus low, and they were even more in alignment of giving us a bullish extreme at the March low. So these are very, very helpful for us, both in determining when the market's getting too bullish, too bearish. And here in a moment or so, we're going to look at the real charts. And Greg's been saying that the market internals right now are flashing, caution, because there's too much bullishness there, and the McClellan is overbought.
And it's a little counterintuitive in that when it reaches such an extreme, you think, well, that's really bad. All those stocks are going down or going up, so many going up. Well, that's such a positive. And while it is in the moment, historically, right, we go back and we look at decades of information. That's what I did years ago, and it's still consistent to this day. And we say that, hey, at what point is good too good, right? Too good to be true, or it's so bad, that's just how bad, how much worse can it get? And that's the fear part, is like, when it reaches that level, of course, our emotions, normal human emotions, come and say, hey, you know what? I'm a little afraid of this market. This thing going down like a bag of rocks off the building. I don't want to get in front of that. Well, we don't trade the internals, but the internals tell us when historically we're at or close to a turning point. Doesn't happen where it turns on a dime. It could take days. It could take a week, maybe a week and a half. We know we're close. Then when price gives us the confirmation, we have the confidence to act based on what we know is a historical norm for prices to do that. And then money management takes care of a lot of things.
And Greg, as you were talking, I was just looking at this bearish alignment right here.
Yeah.
This was a rally to resistance, and we had a lower high with already at a bearish extreme of breadth, and we had a bearish turn here on the trader sentiment. They got back into being too bullish after an 8-bar rally to resistance. So yeah, there were two awesome ones right there.
And, by the way, you may say, well, are there other internals we need to look at? I've looked at probably 20 others over the years, looking for, the sure thing. And eventually I narrowed it down to just using these two. They have to agree with each other to get a signal. One without the other is no good. But looking at everything else, it just became redundant to what this was. And so just like everything, the less information, good information, right? Not, it's got to be reliable, good information. The less you cloud it with making it over complicated, the easier it is to make decisions.
Yep.
Just try putting, 6 indicators on the bottom of your chart and watch what happens.
Exactly. And then tell them the story. If you don't like the answer of the 6, you'll start tweaking them.
Yeah, you start changing the settings, and yeah, it's a vicious cycle, down the rabbit hole with this indicators.
All right. All right. So those of you in our green trading room, which is our live trading room, we start at 9 a.m. market prep. We're scanning, we're trading, we're answering questions. You know what the importance of a trading plan is because we talk about it every single day. But a trading plan is simply your document to how you want to trade. We teach all kinds of strategies, stocks, options, different time frames, different setups. We want different management strategies, but that's what your trading plan does. It will define the things you trade, how you want to manage them, in what environment. And then it's simply down here, the disciplines and patience to follow your plan, your method. So in the green room, people ask me, hey, what do you think of this? And I'm like, well, what I start with, what's the setup? What time frame are you trading? And then I get all the time, hey, should I take profits here? Same thing. What time frame are you trading? What are your trail rules? But it's really this is the key to success. Greg talked about money management earlier, and it's kind of unfortunate. I guess it's human nature though. Everybody gets excited, and right here, Greg's course, they get so excited and empowered after taking it, and they want to go out there and start trading. And here, show me the setups I want to enter without as much emphasis on the trading plan, their trade management rules, and money management.
By the way, folks, this news event just happening this week. It's not on the site yet, but for those that speak in Spanish or want to listen to this course in Spanish, it's going to be available probably in a week. In another week, we'll have it available on the site in Spanish as well.
Awesome. So this is the Greg's course here, swing trading course. We've had people in our green room who have been trading over 20 years, and they take it, and they whether you're new to trading or been around for decades, this course will drastically improve your understanding objectively of interpreting price action. Greg puts it together in an amazing thought building process, and I recommend it to anyone for anything you trade. All right.
That link that I just dropped in there, I'll be talking about swing trading and day trading, and it'll be a great session for an hour. You'll learn a lot. Sign up. All right, so let's go to the charts, Dan.
Yeah, we left a little bit more time today, so we can do our market review, and we can scan if we have time, answer any questions you have.
Let me see if I can move this. Yes, I can. Okay, so this is one of the screens that I use on the weekend for our advisory and ETF letter. So in the advisory letter, I use the Dow chart. Those of you that are subscribers, you recognize this chart. And I write up an educational piece on it, and you can see I've got all different concepts marked up there to reinforce what we teach. And we go through the trend and support and resistance, and I can see unfilled gaps that are marked in wide range bars, and see no follow through. And so this reinforces what we teach in the courses. And that's our goal, is to get you to be able to recognize these things on your own. And then I go through all of the sectors and multiple time frames, and then I do a video. Dan does a video explaining what's happening in the markets. So again, the top-down approach, what's the S&P 500 doing in multiple time frames? And as we look at this, and then we'll explain, here the red bar ignored, which that was an amazing day, Dan. I mean, intraday, to the way the markets tanked.
Trump tweet.
Yeah, and how it came back, but what a tell, right? So when we talk about a tell, it was like, here is something that was like a giant neon sign that said, buyers don't give a damn.
And in my nightly video, I said we have a bearish bias on a slight bounce, but I said, you know what? If we gap deep into this thing and take out the high, my bias is going to flip on a dime.
Yeah, and it was incredible that it gapped up like that, and amazing that it gapped up to the top of a giant red bar. But when you have a method that will force you to shift your thinking, right? That red bar was really convincing. I mean, intraday, it was like straight down.
Right.
It was powerful. And then to gap up like that and hold, and buyers to hold the gap, you can't fight it, and if you were short, if you sold on that day, which no one could blame you for, because it was such a nasty intraday sell off, you just have to brush it off and just get back on the horse. So now we see the markets are approaching a prior high, price resistance. There's a little bit of backing off here yesterday, and now today it's pushing under those lows. And so now, at what point is it going to stop pulling back? Well, in reality, we really don't know. That's why bar by bar analysis is another concept, and we just follow this and say, well, look, if the move started here and it ended here, somewhere in between, buyers should want to step up again if they're going to. The deeper it pulls back into here without buyers stepping up, common sense, it's negating this move. Now, we don't know if it's going to happen. Right now, we have a bias that they're going to step up. It could be in this unfilled gap over here, right? But we know the deeper it comes in, the more this move up becomes into question now. And we do that in all the markets. So we see that the monthly has had a heck of a move and has made new all-time highs, and it's consolidating. So we have to put it in perspective. Right? So while we could take advantage of this move lower intraday, which we could short, it really doesn't make sense to do that for a swing trade at this point because of the strength. Now the weekly chart, right, had this big move and another big move, and it's pulled back, and the proximity to the prior high puts into question whether it could actually get through that, especially based on the monthly chart. Maybe it does, we'll see. And we just continue to do the same. And so we look at, are there differences between markets? Meaning, is one showing relative strength or is it showing relative weakness? So we can see this is pretty close to the prior high as well. But look at how this went up on the weekly time frame. Let's go back to the spiders. This one went up and had a more of a correction, these sideways bars, whereas the Qs had almost no correction. It went sideways a little bit, but you see the vast difference in how it moved up. That's why the Qs were showing that relative strength. Technology, we know that the FANG stocks were basically, the majority of it was moving this market. That's why the breadth was so anemic for a long time, which we can take a look at. Anyway, you're getting the idea. Broader markets, this is what we do in the letters, broader markets, right? The Russell now playing catch up, the transports, right? Playing catch up, finally made a new all-time high. And as we go through all of these, right, we look at, are they at support? Are they at resistance? Are they showing relative strength? So this was one that was showing relative strength for a long time. And now it's beginning to show a little relative weakness. And all we need to do to determine if it's showing relative weakness is compare it to something else. So here is the prior high. And we just kind of eyeball it and say, well, it cleared that high and it's got room to go up. But the Qs, the NASDAQ 100, is much closer to its old high. So communications is showing some relative weakness. However, if tomorrow, now let's assume this closes like this. If tomorrow this closes with a green bar that closes at the high, what are we going to do, Dan?
High to high the next day.
Hey, that's going to be a bullish 180, a
price.
continuation pattern or a correction kind of a pattern. We're going to say buy it above the high.
Explain to them price void also.
Sure. So let's get a little drawing.
And just as an aside, next Wednesday, we're going to be talking about head and shoulders patterns and inverse ones, because this past couple days have been inverse head and shoulders haven.
Yeah. Yeah. So a void is where you get a momentum move and then it stalled and it went down again, but it went sideways. And so now this movement creates this void, this area here where there's nothing. There's nothing to the left to stop this. So while it can correct here in the moment, if we were to get that green bar tomorrow, or even if this turns into a bottoming tail bar, right? We get a tail on the bottom here. It's going to be the same idea, but it's going to be a day early to buy above the high. And then once it enters here, there's nothing to the left to stop this from going up. That's what we call the power of the void.
Yeah.
Whereas if we were to look at, something else, we can bring
Well, the Qs, look at the Qs actually were better because the right shoulder was higher.
I can use the spotlight now. I have the controls. Yeah, so the Qs, with the spotlight, you can change things. Yeah, so this went sideways and started to move. So this leads us to believe that it can come all the way back up here. But it doesn't have to go straight up. Sometimes it does. So now as this consolidation is happening, we'll see how it closes at the end of the day. But it might come down into this gap fill or partially. But again, we want to give the benefit of the doubt to this strength. So if we could get what we call a red bar ignored, we get a turn tomorrow, or this turns into a bottoming tail bar, that's going to lead us to believe this is going to continue to go up and likely make new all-time highs.
Although don't forget to show them the internals when you're ready, because where the internals are, I'm not that confident this is going to be a 180 reversal.
Yeah, well, again, Dan, it could be. I mean, if we see the price pattern.
No, of course, but what I'm getting at is I'd prefer those internals to bleed off a little bit.
Yeah, well, sometimes we get what we wish and other times we don't, but
right.
David's asking, any idea where I could get access to Fusion DMA? Is that like a coronavirus, drug or something? I'm kidding.
Fusion is a trading platform.
Yeah, I think that's kind of a platform that's on its way out.
DMA
From what
direct.
I've heard, kind of was built by a firm years ago, and I think it's basically being kicked to the gutter. Is there a rule how many bars to the left constitute a void? No. No. Patterns can happen in different ways, folks. And we all, it's a common question from the point of view of asking for concrete details. Human nature wants that to feel secure. Trading doesn't always provide it. So as we bring common sense to patterns and realize that they can form in an endless number of ways, different patterns can suggest the same thing. And so as we look at that, your eye will eventually get trained to understand that and how to interpret it. All right, let's look at a few others. So here's one that's just been a mess for a long time. It's been in this trading range, and I'm not sure which way it's going to go. The monthly suggests down. The weekly says, maybe it can go up if it can, bless you, if it can clear these highs. The daily is just a mess with overlapping bars. So the message is to stand aside.
Well, Greg, so why don't, I just typed the David Hunter here. And folks, if you can put your drop down where you're typing to us, all panelists and attendees, David Hunter just asked, is there any way you can suggest to avoid getting involved in chop? And I said, step one is to recognize what a nice trend is versus consolidation. But since you just said that, Greg, why don't you elaborate on what you just said, that overlapping bars, conflicting time frames, it's a stay away mess.
Right. So when you've got overlapping bars like this and tails on the top and tails on the bottom and gaps, that's one message that says stay away. Another way, and I'm going to talk about this on Friday in the event, how you can utilize moving averages as a visual aid. And the way we do that is to recognize using these three moving averages on the daily chart tells me about all of these time frames, what's going on. So when I see them clustered together like this, I know, and like this, where they're kind of intertwined like a bowl of spaghetti, it tells me that it's a mess because time frames are conflicted with each other. However, it's coming to an apex where something's going to happen, because these moving averages are telling me that those three time frames are coming together, and this is either going to go into a coma, flatline, which is probably not going to do. It's not that kind of sector, or it's getting ready for a move one way or the other. The internals and the fact that this is underperformed leads me to think the monthly chart and it's going to break to the downside. But I'm still not ready to put a bet on that yet because it's still in development mode. Home builders, uptrend, was in trouble here and it recovered. Hasn't broken a prior bar's low on the weekly. If it does, we've got a clear message that momentum is slowing down, which makes sense that it would. It's been going up, geez, from the March low. So at some point in $60, a big whole number.
We're still in that in our ETF trader.
Yeah, I mean, so far it looks great. And here you can see the moving averages, how they come together, and now prices are moving away from them again, where they were far here, and then the correction pretty far from the 200. And I don't think we can go through all of these sectors, but you get the idea. Again, biotech broke down, it went up, higher low, messy, and now back up again. Oh, and pharmaceuticals have been all over the place. Right, break out, break down, break out again, up at the prior high. And by the way, these lines here, if you're wondering what they are, this is how I use the a measurement of 80% to objectively say, you know what, if something's in a downtrend and it retraces 80%, I'm going to move the ETF matrix to sideways. So it just gives, it's not about support and resistance. It's about a clear, objective way of having rules to say, look, if it's gotten to 80%, that's strength. Let's not call it a downtrend anymore. Let's call it a sideways trend. So that's how I utilize that. And if there are any stocks you want us to look at, you know, again, multiple time frames. The idea is to recognize what's happening in multiple time frames. The daily chart is up. The 50 MA is up. The 200 is up. The idea is to buy pullbacks, buy breakouts, buy continuation patterns. And let's jump along here.
Greg, show them Tesla. We gave a long recommendation on that today, and you talk about all the concepts you want, but also it's showing incredible relative strength right now relative to, you know, to the market selling off the last hour or so.
And it kind of underperformed a little bit earlier, but it didn't break down. So this correction, and you can see the big pullback after the stock split. And then, you know, here where it came down to this support, once this made a pivot, right, I explained to you what a pivot was. It created new support, and there were buyers on the pullback into that area. Now, as it came up to resistance, it didn't pull back again. It went sideways, and it formed a higher low. And now as it goes sideways here, and expanded a little bit, notice the bottoming tail bar that took out that prior bar's low. It's a little correction bar there. So now it's taken that out, and it's green on a red day. So showing relative strength. There's no reason to think that it can't continue to go higher at the moment. So it looks good. And you can see all the time frames, what, you know, has gone up like that. It is, of course, got a little extended on the monthly, but it's corrected here on the daily. You know, whether it tops out when it gets up here, we don't know. Right now, it looks like it's going to go higher.
And I don't know what's up with Baidu today, but it's had a big breakout bar, BIDU.
Yeah, I don't know. Yeah.
Wow.
Yeah, big move. Right. But look at the monthly.
I said the monthly looked like it was going to 160, I think I said.
Right. I mean, just the fact that it's based out like this with this breakdown failure.
Yep.
You know, if it could go sideways here a little bit, this might be a giant winner next year.
It's on my list. Yep.
Yeah. You know, kind of put it on the dumpster diver list, Dan.
Yep.
Yeah. James mentioned NIO. I know that's been in the news lately.
And we have a short put spread on that already. And it was a long recommendation for our advisory letters, but the gap messed it up.
Yeah. Give a little love to Tim on YouTube. He always picks good stuff. Kind of a bottoming pattern, Tim, not your usual stuff that always looks great, but it's definitely bottoming. And this is what many would refer to as a bull flag, you know, after the move up and this consolidation. So maybe it can get going. I'm not a big fan of bottoming stocks that have been crushed like this. Spice, you mentioned this yesterday, Dan, I think, or the day before.
Space, yeah, we have a call spread on it.
Yeah.
No, call spread on Beyond. We have a put spread on Space.
Yeah. So maybe tomorrow, if this red bar is ignored, it can get above that high. No, it's another bottoming pattern. So definitely, you know, keep an eye on that.
Yep, over today's high. Yep.
Did you? Oh, we already looked at that. VIPs, that's a blast from the past. That was a big high flyer years ago. You can see over here, and it got crushed. It's kind of coming back again. So, and this is something I'll talk about on Friday in the event that I'm doing with the moving averages. It just tells you that you've got multiple time frames that are conflicting with each other. And it's repairing, it's trying to, get it together, but I'm not a fan of this kind of a pattern here until it does more work. Microsoft, probably one of those. Yeah, a vertical move to the downside, that's nasty, but it's repaired the damage. These head and shoulders types of bottoms, and, looks like the NASDAQ, where, we'll see if this becomes a red bar ignored, whether it pulls back further, bottoming tail bar. Right now, wait for your setup. I promise we'd look at the internals here. Don't want to. So here's our internals that we review. And so this was, Dan showed the slide. This is sentiment, which is pushing up, not only past the static 0.80 level, it's pushing up into the upper bands to reach an extreme. And breadth has already reached an extreme over here. So we've already got the warning, Will Robinson. If you don't know who Will Robinson is, you're a young guy or lady. You can look that up. But we're getting closer to an area where the market is going to correct. And that is in alignment with the idea of the weekly. Let me just drag this over here. You can kind of see it on Microsoft, the weekly possibly becoming an M top, which is probably, it's going to take a few more weeks for that to actually play out. So again, as markets correct a little bit, breadth is coming down. So as it should, if it should come down to zero, and there's something to keep in mind, Dan, if this comes down to zero, even though we've gotten the signal, it'll probably be the point in time where this tries to trigger back up again.
Reversing.
Yeah. Historically, after a strong move, this breadth internal coming down to zero will be the point where the markets will turn. Now, what I thought was a little odd, heads up, was that this breadth was so anemic on this big up day. It's like it gapped up and the market was so strong and breadth was so, this is the day-to-day breadth. So what we would want to see on a strong day is breadth coming up above plus 1500, even 2000, right? You see right here where it came off of the low? That means there's a lot of participation on that day and it's confirmation of the turn or green wide range bar. And so as prices are moving up toward resistance, the wrong way option traders are loading up on calls. So already, those of you that do options, a couple of days could be the result of you losing your money. Those options lose their premium. And even though it goes back up in a couple of days, unless it does it violently, it just gets back up to the high, you're holding a loser because of the time decay. So, options, I don't know, Dan, some of the words you use, but I just look at them as they got variable things going on there that you have to be aware of. It's not just the directional kind of last is going up or down.
Absolutely. Volatility and time decay, without a doubt.
Yeah. So there's our internals. We've got our warning. It doesn't mean that this can't go higher, but we know we're getting close to, a deeper correction, which could be sideways. And, gold is starting to recover over here. I'm not so sure it's going to survive, but at the beginnings of a shakeout. GDX, similar. The deeper it gets up into, this is a void. The deeper it gets up into here, this is a shakeout and then opens up the possibility for a nice big move to the upside. Tim is asking about DIOD. Sell a call spread, climactic. If
Or
you,
or get out of the position.
yeah, right, get out. So
But it's back to what I said earlier. It depends what time frame you're trading. The monthly looks great, but yeah, daily looks like it is extended.
So, you know me, Dan. Today's Wednesday. If I could get a call spread like at about 66, $70, which is not going to happen, that expires on Friday, I'm looking for a no-brainer.
But
Now,
just go with the week's high and let them take it.
yeah, yeah. So, if it was an M top, we could be more aggressive with a call spread and go out an extra week because we'd have a more powerful pattern. So, as far as option trades go, Dan and I, we're looking at starting with the chart. And by looking at this chart, which is, okay, the momentum turned and it's extended. That's one thing. If it was an M top, it's a bigger, more powerful pattern. If it was a head and shoulders top with a breakout failure, it's a more powerful pattern of a top. So depending on the pattern, it would increase our confidence level of an area of resistance not being taken out, which is, essentially common sense. And we just keep applying the same things. TTD, that could be a call spread, right? Maybe it's $700. I mean, it hasn't broken a prior day's low yet.
But what about what you just said on the other one? I was about to type to Lionel, I would want more of a potent reversal.
Right? Sure. I mean, if this came down and filled the gap today, then it's got even further to run to get above today's high.
Although the hourly, we do have a bull sandwich, which is a good sign.
Yeah, we haven't even talked intraday yet, but yeah. So when Dan says bull sandwich, that means the bullish bars in the middle.
Right.
You've got two red bars. So it's beginning to top out, but it hasn't really broken down yet. Let's see if it does. What else? Take a quick PayPal, PAMS PL, and on the weekly chart, M top, beginnings of an M top. We got a bearish reversal here. So beginnings, I mean, this is something for a call spread, Dan. If there was something up here,
Okay.
yeah, I mean, maybe tomorrow, if it broke that low, then we got for sure this as the first line of defense.
Sure.
But next week, we'll see where this ends this week. And then next week, if it breaks here, the monthly, look at the monthly over here, stalled and extended. And well, that's pretty good that it came back from that retracement, which still leads to, the potential, having a call spread probably works out because this probably is going to chop around for a while. And
Agree.
yeah. So let's take a look at where the futures are at here, right? M top beginning and 15-minute chart. Right there's your breakdown. So nothing to do here. It's trying to stabilize, and which means it's a good time to go to lunch.
Exactly.
I hope you guys have enjoyed this. We did a little different this week, looking at broader markets, the top-down approach with internals. And we'll be back next week talking about head and shoulders bottoms.
Right.
So have a great day, and we'll talk soon. Bye-bye.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.